some trades, and I'm going to have a look at my ideas from yesterday. First things first, let's have a look at the daily candle. It's always good to look at the daily candle when you have a new candle print and try and find out what that candle means, the meaning of candles, and candles have meanings. So we had 2 bearish days, increasing volume, and then we have a green doji. Okay. The good thing about this green doji is that we did take the liquidity from the lows. If you see on the index, it doesn't show it. You see how on the index, you're not seeing the liquidity taken from the lows here. But on the Bybit inverse perpetuals, which is the one that I think most people, if they're interested in accuracy, they should be using. This one, BTC USD perpetual contract from Bybit. That's probably the most accurate one. Hi, Sushan. Yeah, Atom was a good one. Huh? I saw that. We'll have a look at Atom together, but I saw that it bounced. Yeah. I've got a friend who traded who took it long this morning as well. He sent me a message. Interesting that you should say that. So when you're looking at the Bybit inverse perpetuals, you'll see that we took the liquidity from the previous candle low. You see that? And then we closed green. Okay, so there's a little bit of a clue there as to the weakness of the downward move. Okay, because you would expect, and it's about expectation, when you're taking the liquidity, you're stopping people out. Like if people are long, when you look at the range, yeah, when you're looking at the range right here, when the price goes underneath these wicks, what's happening? Anyone who's long is being invalidated, so they get stopped out, so they're selling. You get sell pressure at the lows. When the price comes down, you get sell pressure, market selling pressure. So when you get the price go up and reverse after you get this sell pressure, that's an indication. It means that the sellers have lost their strength, or they're no longer strong, or there's not enough, there's too many buyers at this level to push the price right back up. Now, the buyers don't have to be new buyers. I'm not saying you've got new entrants to the market. It could just be shorts buying at market to closing their shorts. They're buyers too. You see, people who are taking shorts have to buy. So people who are short are buyers too. It's just about where. So it just tells you that the balance is changing. It's turning. There's a change to the balance. So when you have this kind of bearish price action, this is really bearish. Yeah, this is quite bearish. And then when you're going down, taking the liquidity, stopping out anyone who's bullish, and then you're still back up here in the range, you know, that's actually quite bullish. That's not bearish at all. Yeah, or it's a lack of bearishness. Maybe not bullish yet, but a lack of bearishness. Okay, so when you're looking at different exchanges, you may not see that information. Like when you look at, if you're looking at the index, yeah, when you look at the daily chart on the index, you're not seeing the swing failure of the previous day low. Let me have a look at Binance. Binance, you see that? So Binance and Bybit are the main ones as far as I'm concerned. Binance and Bybit are telling you the same information. And then the other thing I was paying attention to, I don't know if anyone was, there is some kind of horizontal line here. This is a daily time frame. You see that there is a little bit of an SR flip going on here. Okay, so effectively the price stopped into support. This is just an imaginary line. There's no other line here. It's just a line where you can clearly see that the candles are stopping and starting around on the daily time, and they're stopping and starting around this level. Yeah, you can see that. You can see where the price stopped. You can see where the price held. So effectively, this is an SR flip and we're back into support. And it's holding. That's a hold. One doji, one green doji is a hold. Now, this candle is a bullish, should be a bullish candle. It's the bull's attempt to push the price up. We have to see how the bulls perform. So this candle is going to be very important to determine whether we continue to go back down or whether we're about to go back up. Okay, this candle now. All right. So if I go back to a lower time frame, have a look at the range. I'll redo the volume range first. Exactly. So Sushant is saying that it held at the point of control. Exactly correct. I was looking at that too. We'll pull it up anyway. And it's good that you're seeing that for yourself, because that will give you the confidence to trade. When you see that, when it was one thing me telling you, okay, but when you see it for yourself, that's something else. And so I think the point of control that you're referring to is the local range. Okay, so if I do a fixed range here from this candle that comes into the range to the current price action, you can't see it on the 15-minute time frame, but you'll see that actually it was the value area low that was holding. On this range, you see that bounce. You had a little bit of a swing failure of these lows here. You had a nice V shape bounce. That's quite strong, huh? That's pretty strong price action. That's kind of what you want to see. As soon as the price got back above the point of control, I took a long. Okay, that was my, I wanted to make sure that the point of control wasn't acting as resistance, and I'm in a long right now. And so when I go back to my previous, yes, let me just do this volume first. Let me just see that there's no changes in the volume. Okay, I just want to because I know we're approaching the POC right now, and I just want to make sure that there's no changes. Hold on. Okay, no real changes. The value area low is slightly higher. That's about right. All right, we can delete that now. All right. So the trade that I had planned from yesterday. Was this one. Back into the golden pocket. You see that? I had that in my mind. I didn't take it as a swing failure happened. I waited for the price to get back above this pivot, which I had in mind. Okay, so this morning I risked I came in at 117, so I came in a little bit higher, and I saw a bit of strength. I came in, okay, about here, and then I just risked 1% in that trade. And the good thing about small invalid, even though I've got this invalidation here, basically the good thing is that actually my invalidation is smaller now. I don't need to put it at the lows, because now I'm starting to see strength. And now that we've come above this kind of level, I'm not really expecting the price to do that. If it does, I'm stopped out and I lose my 1%. That's fine. And then the other thing that I was looking at yesterday, hold on. So there's a few interesting things. Okay, so we have okay, so this short that I had planned yesterday was front run. I don't know if people are familiar with front running, but basically that short was valid. It's just that it was so many people wanted to short it that the price couldn't actually get to my level of interest. It was so it was front run. Yeah, so you see how the price gets to here, and it's not far from my level of interest. So it was only about 0.5% away. And effectively what that meant was that there was a lot of people shorting into that level. It was so strong that it wasn't even possible to swing failure. I was looking for the swing failure, it didn't even happen. Okay, so it was a good trade. It was just that we have to bear this in mind. Sometimes these levels are front run, and potentially what I should have done is I should have started scaling in, because there was so much confluence here for a short. Okay, and when it came up, it just immediately rejected. So you could argue that that was quite a good plan. It was just probably I needed an earlier entry, and I needed to scale in. Okay, so that was quite interesting. I can remove this trend line now, and I can probably, let me move this pitchfork now as well, because I like that. So these are still relevant, these fibs, so I'll keep them, and I'll just delete that. We're going to start rolling. We still have an SFP, so I'll keep that. Get rid of this. We can get rid of this long idea. And get rid of this idea now. Okay. So what you can see now, which is quite interesting, is that this trend line has been front run and we're back into it. So this whole price action here was a front run, and now we're back into the trend line for the 4th time. You see that? That's quite interesting. Tushan saying it feels really bad when the price almost touches your target range and then moves away. Yeah. No, you don't feel bad. It just gives you an indication of, I mean, you don't take the trade, or you have to take the trade later. If I really wanted to take the trade, I could have, because the price, as it comes down, it comes right back into the golden pocket. Do you see that? So I still had the opportunity to take the trade, but it would have been this instead. Okay, it would have been that kind of trade instead. Into the golden pocket, reaction, and then it's not a bad trade, because even though the price held at the lows here, the price could have gone down. So it's not a bad trade to take. It's just that you do have to take profit just in case the price reverses, and you can't expect the price to expand just because you think you got a good entry. Fundamentally, what happened yesterday was that area of interest was front run. It came back to test the golden pocket on the local pullback, and it continued. And when you yeah, you see that? And now we've come into the golden pocket again from this pivot to this low. But the interesting thing for me is that we're kind of, this trend line is no longer offering resistance. Okay, you see how the price action now has gone through it with volume, increasing volume. We're back above that trend line. That's good to see. So we don't have this problem with this trend line now. The good thing is that we're not here anymore. We're not in this area of confluence. So the timings are really important. And then the other thing I was like interested in seeing yesterday when this was forming was, it's hard to see, but there is some sort of, there is a megaphone pattern forming here as well. Like that. There's a little bit of a megaphone here. And so this morning also, when I saw that the price bounced into this area, which was also the golden pocket from this pivot to this top, You see that? Bounce into the golden pocket. Kind of confirming the bottom end of the megaphone. So I'm actually quite interested to see how far we get up now. We have this area of interest here, which is still the point of control. And if we go up, do we get up and start flipping? Do we flip that top trend line into support? Yeah. I think now as the price starts to go up, people are going to start getting bullish. And we just have to see how far. You have to see how much resistance there is here. Okay. It's not as strong as here. Here was a lot stronger just because we hadn't broken this outer trend line yet. And also it was coming into the bottom of this kind of pitchfork that I had. So there was a lot of confluence at that point. This is going to be slightly different. And so potentially what could happen, there probably will be a reaction off the point of control. There's a good place to take profit if you're in a long. And then if we kind of get above it, I think then we'll go up, honestly, because I think the thing is, once you come above, you're going to fill this gap, and you have single prints that will fill if you get acceptance into the single print. No arbitrary trend line or pitchfork is going to hold the price once you are into filling a volume gap. The volume gap will fill once you get acceptance into the gap. So I'm not expecting these arbitrary 50% lines or these kind of pitchfork lines to hold. If we do get back into the single prints, we'll go up. That will still be a good area to short, and maybe that here will be coming back to find support. So this is kind of what I'm thinking for today, actually. Let's see how this plays out. We could get a massive rejection from the point of control. That's always possible. But I have this idea of this megaphone down here. And then what I'm going to do is I'm going to kind of draw it out a bit better. Let me clean my chart up a little. It's a bit messy. So, which one is that one? Get rid of that. Get rid of that. That's that lower trend line. That's fine. And keep that. Keep that. So we still have this right. Let me just, on this one, I'll just keep the golden pocket because that's only really interested in the golden pocket. Let's see what that one is. I'll hide that one. Single prints, point of control, that's fine. And then you have this trend line which we're breaking out from now, which is good to see. Let me see this current range again. You have to get back above that volume area. So what I want to see is I want to see us hit the point of control, come back to back test the volume area, and hold the value area high as support. That's what I want to see. I don't want us to see us to go into that point of control and come back into this volume area. That would just, to me, that would just say we're still a range bound at the lows. Okay. Definitely be looking to take profit at the point of control, just in case we get this. Okay, we could still be range locked in this range to head back to the low. You know, because this could still happen. Just because the price is going up doesn't mean it's going to go up. So when you get into areas of resistance, definitely look to take profit if you're in profit, because the price could reverse. Okay, especially if we can't flip this value area high into support. Okay, so there is also a potential short, even though it's not going to be as necessarily as powerful as this one. You're still coming into the point of control, you're still coming into a single print, and you have an easy entry. That will be a swing failure pattern of that previous high. Just bear in mind that you could find support lower, slightly lower down on the value area high. If you do find support, then you'll just have to cut that short at break even or at a very small profit. If you see that you come back down here and you're finding support, but the price could go down all the way back down to the bottom of the range. If we're still range bound, that becomes a deviation from the range. You'll just basically means there's not enough liquidity to push the price up, and it will just come back down looking for liquidity. Now, it doesn't have to come back down to the bottom of the range. It could always just come back down. If we lose the value area high, it could always come back down just to the point of control, you know, for one more time, you know, just to pick up more liquidity. It could always do that. You know, it's always, the price is always trying to do something like that. If it was to do that, that would be a really good area to long, because you'll be coming into the golden pocket point of control and back testing this trend line again. Okay, so potentially you've got like a long there if that was to happen. If this was to happen, you've got a short. If you can get a swing failure off this pivot here, you can do a swing failure. You just got to be careful that we don't find support into the value area high. If you see that there's support forming on the value area high, then you just have to take a really cut at break even, really, because you might not get a good entry, you know. And these are the two potential trades right now that I can see. I'm in a long already. Okay, I've got so I am actually targeting the point of control, so I don't need to do a long trade plan for where I am now. And that was from yesterday's planned longs. I was looking to long. I was just looking for an entry with an invalidation, and this was it. This whole price action was it for me. That was enough to confirm entry into this price movement. And then the megaphone idea, let me just kind of flatten it out again. So there to there. There to there. And something like that. So we go up to the top. Let's see. Probably not. I'm not fond of this now that I've just drawn out, because we'd have to get there quite fast. Like, we'd have to go up now to get there, because really you just want to go up, flip that top bit into support for continuation, because it's quite a bullish pattern if that was to form. If it takes longer and you're finding yourself coming into the top where you've got other confluence, then actually it's not so great. Okay, so timing is really important. So let's just see what happens. It doesn't look like we're going impulsing up right now. We're kind of slowly but surely kind of heading in an upward direction. Let's see what happens. Did I move my stop loss? No, I haven't moved it yet. Not to break even. I could move it to break even, but I don't, you know, like I don't like to really mess around with my stop losses because the price can always come down, stop you out and go up. You know, like price loves to do that. If I was to set it at break even, there's still not enough distance to do that for me, for my liking. Usually what I'll do is I'll take profit, then I'll set it to stop. So I'm still risking a percentage. I'm not in a rush to move it to break even. Because often if you do that, you'll get stopped out and you're still correct. More so than not. So I'd rather just risk 1% and see what happens, you know. And obviously if we start losing this trend line and losing these lows here, then I'll be a little, you know, like then I'll probably take a much I'll probably take a much smaller loss. I won't let it come down to my stop loss because that's not the kind of price action I'll be looking for. We just have to see what happens. Okay, like I like to give trades a little bit of time and a little bit of space, and at no point in time, like my stop loss is underneath the point of control, right? So I don't expect that. So even worst case scenario, if it comes down, I will expect it to bounce, and then I have to see what happens. But I'm not risking more than 1%. I don't do that. I'm just checking now. Let me just see my stop loss. So I'm already up 1/3%, which isn't my target, and I'm my stop loss is, let me check. I'm risking just 1%, just over 1%, 1.1%. And basically what I really am aiming for is the point of control. And so we just have to see what happens. All right, give it a bit of time. We could easily reject off this trend line now. I'm also considering that. Okay, but it doesn't look like we're looking to reject right now because we've hit it on this hourly time frame. You can see that we've hit the trend line once, twice, and now we've pushed through. It looks like we're trying, it looks like we want to get through it. You see the volume is quite nice. It's not, we haven't got decreasing volume. You know, the volume is quite steady. And it doesn't look too bad right now. Let me have a look at the order flow on Exo charts. Good morning, Ali Hash. Slurf, yes. I was looking at Slurf. Slurf looks good, even though it's gone down. So this is the order flow. If anyone's not familiar with this, you can see all the market orders. You can't see that on the charts, but on this you can. Basically, you can see all of where people are market buying and selling. And then you can also use the open interest data and the CVD data and then the footprint data to determine whether it was longs closing or it was new longs opening, right? So I'll give you an example. Do you see how this OI, this open interest, goes down by minus 6.8 million? And you see how the price goes up like that? That is a short closing. Yeah. So you can see here a short closing. Good. When you start seeing shorts closing, that's a good sign for longing. Yeah. If shorts are closing, it means shorts aren't expecting the price to go down anymore. Yeah. And also something that you can see very clearly, I don't know if you can see it, you see from this swing failure here where the price went down and came back above, can you see how the OI is gradually increasing and you see how the price is increasing, that means that longs are opening. These are brand new longs using leverage to open positions. That's what you want to see. You want to see longs opening. It means now that you're longing, you're on the right side of the market because you're longing with everyone else. Okay, that's kind of what you want to see. In the previous price action, we didn't really see that. You see how the OI was dropping. We didn't really see longs opening. This is the first time now we're starting to see a steady increase in longs with an increase in price. Yeah, so it's kind of what you want to see. I'm not seeing any kind of oh yeah, there was. You see, there are bullish divergences on a slightly wider scale. I'll show you. You see how here we have this this low, this pivot that's put in. And if you look at this CVD line, so the CVD represents delta. Delta is market orders, so people buying and selling at market. When the delta line goes down, it's market selling. When the delta line goes up, it's market buying. So as you can see here, we've put in a pivot. And since that point to this pivot here, you can see how it's a higher low on the price. But on the CVD, you can see it's a lower low on the CVD. So from this point to this point, you had more market selling, and yet the price is higher. It's making a higher low. So that's called CVD, bullish CVD divergence. Okay, so you can see that the market selling is being absorbed, and most probably it's being absorbed by limit longs absorbing the market selling. Okay, eventually what happens is you have an exhaustion of selling, and then as people start longing, which is happening now, you're starting to get the price move up. Okay, and then what happens is that shorts start to close, and so you see how the price pushed up here. That's a short closing. Let me see. OI going down, price going up, shorts are closing. Let me put this one in. This tells you the dominant size. These are that's a short entering here. Okay, but then their shorts have to close because they get pushed out, and so they end up closing a market, which pushes the price up. So you had some people shorting as the price came up, but actually they closed and the price is pushed up. Okay, so we have and we haven't really squeezed the shorts yet. I think once we get back up above this range, above these highs, you're going to suddenly see a lot of shorts close, and the shorts that are going to be closing are the shorts from higher up. Yeah, so the shorts, you got people in the shorts from higher up, they're holding on, they're looking at this range and they're still in good profit. But if they start seeing strength in an upward direction, they'll start closing their shorts at market, and then that's when you're going to get the price come up really fast. Okay, so we're not there yet, but what we really have to do is we have to flip this previous stay high up here. You see this blue line, and actually that corresponds with the previous month point of control. We really have to flip that, and that's probably the point of control of this overall range. We have to flip that into support. Once you flip that into support, what's going to happen is you're going to fill this gap, this big gap, really quickly. Yeah, price will go up really fast. And then if that was to happen, you definitely will take profit at the highs. You have to, because I would be expecting a bounce up here to go down. Okay, so that's just something to bear in mind. We're not there yet, but I mean the price action is not looking terrible for the bulls. You know, let's just see how this plays out. Okay, the good thing about Bitcoin behaving this way, not showing weakness but kind of not going anywhere, is that it gives the altcoins an opportunity to misbehave. Or, you know, it's like when Bitcoin is kind of going nowhere, it's not going down, it's not going up, it's kind of range bound, but it is showing a little bit of strength. because it's not going down anymore, then what happens is altcoins come out. Okay, now obviously it would be better if we were above the previous all-time high and this was happening, but right now it looks like altcoins will probably come out to play. Let's just have a look. Okay, any questions on Bitcoin? The other thing that we have to bear in mind is that we have the weekly candle that's going to close relatively soon. I wouldn't be surprised if we close higher than the previous week open. I wouldn't be surprised if we close much higher, actually. We have to see how the week plays out, but I wouldn't be surprised if we just close back in the range of this weekly range. And if the weekly candle, and we have to see how strong the close is, but we are in the Bitcoin halving month. I mean, I don't know why people are bearish. I'm like so bullish on and basically every dip in the midterm future is a buying opportunity. That's how you have to look at it. I'm not expecting crazy down moves at the moment. Maybe when we get into price discovery, I'll be a bit more kind of hesitant at taking long so quickly. But right now, because we're still in historic price action, you know, and we're still range bound, you know, when the price comes into the value area low, you're not looking for it to go lower. You're looking to long that. Okay. So that's kind of what I'm thinking.